Hey, this is Matt from InvestiQuant. Today is Monday, January 11th, 2021. And this morning we saw the markets gap down following Friday's strong close. We closed up at all-time highs. We actually closed above the upper Bollinger Band, which is kind of a overbought-like reading. It's a sign of strong momentum to the upside, but we closed up above that upper Bollinger Band of the S&P. This morning we gapped down, and we have pushed higher the majority of the session. Most of these instruments are trading within Friday's range still, so we still have some inside day activity taking place in 3 of the 4 instruments, but we are trading higher and approaching the highs and closing prices from Friday's trading session. So what I want to do this afternoon is take a look at this type of pattern that looks at what has happened historically when you get a close above the upper Bollinger Band, and then the next session you gap down and you're kind of trading within the prior day session. You haven't made it back up above the prior day close yet. So we're going to describe that sort of price action here within Discover, looking at all 4 instruments. The entry time we're going to be using is 3 p.m. Eastern time. The exit will be at 4:15 p.m. Eastern time. For opening filters, I'm going to come in here. I'm going to say that we gap down. That just means we opened below the prior day closing price. And then I'm going to go describe some of this action that we have seen intraday by using the post-open filters. And I'm going to say that today's low is not less than Friday's low. So I can do that by coming into the intraday low versus daily levels, and I can hit minus next to this less than prior low. And what that means is today's low is not less than Friday's low. Next, I'm going to go into this intraday close versus daily levels, and I'm going to say that we are trading below Friday's closing price. So to do that, I just come here and select equals next to less than prior day close. And this intraday close is going to be relative to where the price is at the time of the entry. And since I've got a 3 p.m. Eastern time entry price, the intraday close is going to be the 3 p.m. price, and I'm saying that is below Friday's closing price. So this is setting up some of the activity that we've seen so far, where we did not take out the low from Friday and we are still trading below Friday's closing price. Next, I'm going to go into the indicator section, and I am going to find that day after close above the upper Bollinger Band, and that is available in the active today section. It's right here, the top option available. It's also in this overbought, oversold category within the indicators. Lastly, I'm going to put us above a 10 and 200 day simple moving average, so that close above the upper Bollinger Band is taking place in a bullish environment. Now I can hit view results. And here we go. These are the results of going long at 3 p.m. Eastern time, exiting at the close, 4:15 p.m. Eastern time, when you gap down following a close above the upper Bollinger Band in a bullish market. And then the intraday price action has not taken out the prior day's low, and you're trading below the prior day's closing price at 3 p.m. Eastern. So historically, we've got 32 samples in the S&P, we've got 33 in the NASDAQ, 34 in the Dow, and 28 in the Russell. So this pattern doesn't happen all that often. We've got similar sample sizes of just over 30 in 3 of the 4 instruments. If we look at the win rates, they are all fairly similar as well. So the S&P is actually the strongest of these 4 instruments, with 72% winners, which means about 72% of these have closed above the 3 p.m. Eastern time price. The NASDAQ, 64% winners, the Dow, 65% winners, and the Russell, 57% have closed above that 3 p.m. price. So these are leaning towards the long side here historically with this type of setup. And then if we look at the average win, average loss, it's a pretty small number for the average win to average loss in the S&P, but the average win is bigger. The average loss is bigger than the average win in the NASDAQ. The average win is larger than the average loss in the Dow and the Russell. So 3 out of the 4 have had larger average wins, and all 4 of them have favored closing above that 3 p.m. price when this pattern is in place. So hopefully you found that helpful. Good luck the rest of the day, and we will see you next time.